Hello, everybody, and welcome to another episode of DeFi Talks, the podcast where we go over everything and anything blockchain and crypto related. Today, I have with me my co host Jake, as usual. And for the first time ever, this is our first guest, Brian from the DeFi Philly community. We have him over here as a guest to talk about GameStop a little bit and crypto in general. So, welcome, Brian. Thanks for joining us.
Yeah, thanks for having me.
All right. So, I just want to go over a little bit of introductions again, since it's been a while since we've done our last episode, which was actually about good or bad companies, like how to spot a good or bad company in DeFi. So, I think this is a great follow-up episode, mainly because we're talking about a company that is transitioning from Web 2 to Web 3, and that pretty much all of us know, and that's GameStop. A lot of people have questions as to what's going on with the company, why it's been in the news so lately, and we wanted to bring some clarity about that. But before we dive into that, I want to ask you, Brian, like, what's your DeFi story? How did you get here? Why are you in crypto?
Yeah, no, thanks for asking. It's funny, it all kind of started a while back when I had a laptop sitting there doing nothing. And so I started searching on the internet how to make money basically with a computer just running 24/7. And of course, that led me to Bitcoin. And it was the early days when Bitcoin was basically not worth anything. And so traditional story, mined some, had it on a hard drive died, ended up tossing it. Um, of course, lost the keys. But then that led me to get into other mining, I guess, a few years later. So I actually had a Ethereum mining rig, then went on to a multi-coin mining rig, and ended up selling that, running a master node through a VPS, and that opportunity kind
I
of
have a
kind of went away
question.
as well. So yeah,
What is
go
what
ahead.
is a master node? And I know that like a VPS is basically like a VPN, but instead of it being a full network, you do it through like an individual. But what is the master nodes?
Yeah, so the I guess to answer the first part, the VPS is basically just a slice of computer resources that you can rent. So like Amazon has a bunch of computer resources, and you can basically rent a slice of that to run whatever software you want to run on it. And the master node is actually part of the consensus mechanism for some of these blockchains, where basically you stake some of the coin or the token on that blockchain, and the network then trusts you for some of the higher level consensus that's necessary for the different consensus mechanisms. And in return, you're given a reward, just like a miner. Uh, so, so it's basically staking as consensus, but it also requires you to be connected to the network and actually interact with the blockchain.
That's very
So
interesting. I haven't heard of it being done that way. I've heard of a lot of different like warehouses that have miners. I've heard of um I just thought that cloud computing would be too expensive and would take off from the margins of running a miner. I'm gonna do some more research on that later today. So yeah, let's go back a couple of steps. So you wanted to learn how to make money online. You got into mining Bitcoin. That went to you. You lost you lost your hard drive. This is a problem a lot of people can relate to. And then you moved on to mining multiple different coins. And where did it go from there? Was that the end before the GameStop stuff?
so funny, it wasn't actually. After doing the master nodes, actually, I got really interested in a program called Crypto Hopper, which is just an online API trading bot. So you basically connect it to whatever centralized exchange you're using, and then set up rules to automatically do trades between different cryptocurrencies. And the idea is if, say Bitcoin to Ethereum is currently undervalued, you'd buy it. And then if a few hours later it's overvalued, you'd flip it and sell it and take the 1% gain. And if you could do this automatically with a bunch of coins, you can actually get pretty good returns. So I guess most of my crypto interest was in that. And then once I guess I learned about GameStop, I ended up putting basically all my capital into GameStop. And so I'm still interested in that. I just unfortunately don't have the capital to put into it right now.
Is that a is that a high risk like strategy? So when you're running bots and they're doing the work, like not the work, but they're doing the trading for you. You mentioned something about setting rules. Are you able to set rules like if it ever goes below this amount, don't sell, or like if it ever hits this amount, you should probably like exit?
Yeah. The really cool thing is you pretty much have full control and you can customize it. It's almost like infinitely customizable to however you want to do it. With that being said, uh, you kind of have to know what you're doing. I mean, there's a bit of like TA knowledge and stuff like that. You'd have to know to set that up. And so there is a little bit of a learning curve. Crypto Hopper did offer like a paper trading uh, I guess algorithm or whatever, where you could basically test the rules you set up on paper and see how they work. And so, highly recommend doing that if you're going to get into it. But I kind of played with it for 6-8 months, and then felt confident enough to get it running. And once I had it running, like I said, it was doing pretty well. So definitely interesting to get
Can
back
you
to it.
drop the name of the company in the chat before Jake wants to ask you something, I think.
Sure.
Yeah, it's a really interesting background and journey to get to this GameStop episode, Brian. I appreciate that. One of the things that I think we're going to talk about a little bit today is there are certain companies, as Sharif mentioned when we framed up the episode, there are certain companies that are really interested in the transition into Web3 and even conceptual ideas like making sure their shares are attached to a blockchain. And GameStop is one of the companies that's trying to do that. I think what has happened with GameStop over the last year and a half, there's some growth pains, some pain, some growing pains for the community in various sides. So I think there's a lot to talk about first as in terms of like what has happened. Maybe we can go into the story of like, the short selling and the community rallying and like the cry for like, hey, this is a perfect situation that needs blockchain. So maybe you can get into a little bit of that story about how like your awareness of crypto and then you found the blockchains or sorry, the GameStop story. And then it was like this, wow, there's really something going on here. Why don't you kick off with some of that like initial story?
Yeah. So it's funny. The question everybody always asks is like, when did you first buy your share? And so to get that out of the way, I bought in. It was in March, actually, right after what they call the sneeze or whatever at the end of January. And it was actually because of Elon. He tweeted GameStop with a link to Wall Street Bets, and the rest is history. But really, where the GameStop story started, it was actually the summer before, and if you've heard of Michael Burry, he was actually the one in 2008 that basically was warning everyone that 2008 was going to happen. And he made a bunch of money betting against the people who lost in 2008. And so that summer, he basically came out and started doing the same thing, basically saying, hey, the economy is not doing well. There's these companies that are over shorted. Basically, there's more shares in circulation than there should be. And that this is going to cause the economy to crash. And so there were some other investors that actually approached GameStop directly, the board of directors, and said, "Hey, your share or your stock is over 100% shorted, meaning it's being abused by the market makers. GameStop has a lot of potential. We could see how it could transition to Web3. Basically, we want to help revive GameStop and help make." You have a good brand, a good opportunity. We want to make this a thing. And so they ended up winning a important board vote that summer. And shortly after that, I guess kind of at the same time, Michael Burry actually had a big investment into GameStop. DFV or Keith Gill, he's a YouTuber, basically started YouTubing about the GameStop short squeeze. And that kind of built interest online through Reddit. Um, around December, I think it was, Ryan Cohen, who he was actually the founder of Chewy, sold Chewy for billions of dollars, whatever. He came in and actually bought over, what was it, 9 million shares of GameStop in December. And I forget, it's like something over 10% of the company. And basically, approached the board and said, hey, I'm here to turn things around. I just bought a huge interest in this. And that kind of, I think, reassured everybody online that had been investing in GameStop. And that kind of led to what happened in January of last year, which is, GameStop went up to $300-400 over the course of the end of January. And so, of course, that's when I got involved. And for me, it was funny. I actually bought just a few call options because I was looking on Reddit and I was seeing, I was like, okay, GameStop went up in price, but there's people posting pictures of making like $1 million off this. And I'm like doing the quick math and I'm like, okay, how do you make $1 million on this? And that's where I learned about call options. And so ended up buying a few call options, a few $100 put into it. And in the March run up of GameStop, those call options went to, upwards of 20 grand a piece from the few $100 I put in. And at that point, it got my attention.
Wow.
And I was like, I got to figure this out. There's something going on here. I was looking at my phone as like the line just kept going up, up and up. And I was like, do I sell? Do I, I didn't know what to do. Like, I didn't have enough information. I knew there was something there, but I just didn't have enough information. And so at that point, I basically went all in and basically been following it till today. So
I want to go over a couple of things real quick. And that story is incredible. It reminds me a lot of Dogecoin, and because I've seen people's accounts go from like basically worth nothing to worth a lot. And when that happens, you see all this money being moved around, and for me, it doesn't make sense. I kind of get like confused as to how is there this much money moving in something that isn't that essential. And that's the question I wanted to have for you. Like, have you used GameStop to buy your games or to interact with the world of entertainment?
it's funny, growing up, I did. I really hadn't recently until I guess I got interested in the stock. And then I do try to consider making purchases there if there's things that make sense, like a computer chair, for example. They now sell stuff like that. So a computer monitor, things like that. If I'm going to purchase those, I would go to GameStop first. So, I mean, there have been little things, but
Why would you go to GameStop first for like a monitor or a chair?
I mean, the biggest thing is they're competitive. So it's going to be the same price as buying it at Walmart or Amazon. And I believe more in the company. And I think that, they could do better for society than Walmart or Amazon. So I'd rather give them my money and attribute to their profits.
Yeah, and while you're on that, I'm really curious. So, just exactly kind of building on what Sharif is saying, like, is there really this belief in the business and the company that is GameStop and the business model and its ability to truly transition into the world, whether we're talking Web3 or not? Companies have to be nimble no matter what. Or is this more about like the story and this narrative about like the people against this big short selling initiative? Like, what's really going on? What do you think about that, Brian?
Yeah, no, I mean, that's an important question. And I could definitely see from the outside how that question comes up. And the answer to it is really both. I mean, obviously there's a story about market fraud and there's a story about, having fair markets, having instant settlement, the things the blockchain can provide. But there's also a story about the company actually being turned around. I mean, GameStop went from a place where they were actually in debt. The share price was, $2-3. The CEO and the other board members were being paid outrageous sums. And now, since Ryan Cohen's actually come in, he actually was made chairman of the board. He's turned around the executive compensation. He's brought the company out of debt. I think they have over $2 billion in cash right now on their balance sheet, which is something they didn't have before. And the share price is healthy. You'll read all in mainstream media that they're like, oh, GameStop's worth, $30, $40. Well, I mean, GameStop's been over $100 for the past, year and a half. I mean, I don't know how you value something, but it's what someone's willing to buy or sell it for. And if that price is 130, then that's what it's worth.
So for me, I think that as a store, as a business, GameStop has something really unique going for it, where they create a second economy under them, because people like owning things. They like having a physical copy of a game. They like selling it when they're done with it or when they want to buy another one. So it just creates a whole economy around it. And it also drives interaction and gives the consumer more value than they would typically get if they would buy something off a store like what's it called, Steam or any other online marketplace. And it's less of a hassle to move it out once you get it. Like if you get a digital game, there's a lot of copyright stuff related to that, so you can't really sell the game itself, but you could probably creates all these like barriers to actually benefiting off this item that you invested in one point at another. So I see that as a huge value to GameStop, and I don't doubt that it has a place in our current society. What I do doubt is that it's going to go to like higher and higher numbers, because I don't see it as something that is essential for people. Do you think that claims about GameStop going to the moon and all the stuff that's happening on Reddit, do you think it's actually backed by something real, or is it mostly just like a hype train?
So it really comes down to being there's two kind of outcomes of the current situation, and that's actually something really important to grasp. Is the situation's kind of already happened. The big question now is, how do we get out of it? Or how does the hedge funds and the market makers and the banks, everyone that's short, how do they get out of this? And there's really two routes. One, GameStop can go bankrupt, which was kind of the play all along. That's what everybody was counting on. As I explained, Ryan Cohen came in as an activist investor. He had a lot of support from other investors, and he's basically, turned around GameStop as the chairman. And so the probability of that happening is pretty low at this point. Obviously, there's questions about GameStop's future, but I mean, they have over $2 billion in cash on their books. They have an awesome customer base, tons of support. The likelihood of them going bankrupt is pretty low right now. The other option is basically all these short shares have to be resolved, and the question starts becoming, how quickly do they have to be resolved? Is that something that they could string out over the course of 10 or 20 years and start resolving? Which there's some speculation that, or evidence, should I say, that's what's happening with Tesla. Is it's basically been a slow unwind of all these short shares, and that's why we've seen the positive action with Tesla over the past few years. Or you have like Overstock. They came out and actually issued a crypto dividend. And so if GameStop was to do something like that, it could actually cause the unwind to happen rather quickly. And that's something where the MOAS, or the stock price could, people say it could go to 1 million plus, but I do truly believe if that option happens, it will see 1 million plus. There's no doubt in my mind. The question is more where it's going to stop.
Yeah, no, that's really, I'm glad you can paint that like optional roadmap, or like the 2 or 3 sort of variations of what you expect might happen. And beyond that, I think it's a really interesting conversation around, like, you mentioned the $130 share price today, and where it could end and what could potentially happen, a couple different paths. Let's talk about, I'm really glad you mentioned in the story where I can't remember who the executive was, but the person who came in bought 10% shares, and I think there was a story around like, yeah, let's really transition this thing into Web3. Let's say GameStop.
Wasn't that Ryan Cohen?
Yeah, who's he from? Which
Yep.
company?
He founded Chewy.
The Chewy founder, exactly. So he comes in, let's play out that narrative. Let's say they really throw gas on the fire there. And whatever steps that need to be made to go into the blockchain, how do they really accelerate that? And let's talk about that. What do they need to do that? And then the second part of that question is what happens? There's some you talked about this affinity event. I think that was the phrase, right? Can we talk about that? What would happen if they did the right thing and really threw gas on the blockchain fire?
Yeah. So, and I'm actually going to answer your second question first, and I'll come back to the first, or because it kind of touched on something Sharif said I wanted to get back to. But if there's a big question of does GameStop light the rocket, right? That's what it says. Do they light the rocket? Can they? Yes, absolutely. They could do it any moment. Will they? I don't know. And the reason is if they do it and it's obvious, they can basically get sued into oblivion for causing a short squeeze, because there are laws that say you cannot legally start a short squeeze. And that goes for anyone. So like if, Elon Musk comes out tomorrow and tweets something that causes the GameStop short squeeze, he's going to get sued into oblivion and he probably won't win. So it's kind of like a fine line or a balancing act there. Um, with that being said, like I mentioned, Overstock earlier, they issued their crypto NFT, their NFT as a dividend, and they actually won some follow-on court cases that set precedents that said, hey, you could do this if it's part of your business, because basically they issued the crypto dividend as like as part of a company they were spinning off, and basically it was related to their business. So if GameStop, issues a crypto dividend that's related to their NFT marketplace they're coming out with, that wouldn't be, they wouldn't be issuing it to cause a short squeeze. They'd be issuing it to basically promote their new business. And so that's kind of the fine line there with GameStop, starting the short squeeze. And so getting to the other question, at the big picture, I think GameStop does see the opportunity. And so they are coming out with NFT marketplace. They recently came out with a non-custodial wallet that's actually integrated with Loopring Layer 2. So it's on Ethereum, but there's low gas fees. You can mint, share NFTs, do all that through Loopring. And so I think there's a lot of potential there. With the marketplace, it's still a little uncertain just because it hasn't been released yet, what the extent of what it's going to be. But there's a lot of speculation around, Sharif mentioned earlier, GameStop traditionally has done like used games, or there was that kind of ownership of your asset, your game or whatever you owned. And so, a lot of people think they're going to bring that back with NFTs. And so, there's already some games, crypto-based games where you can basically own items in games, or the in-game currency is ERC20 token or something like that. And so I really think that's where they're going with this NFT marketplace. And of course, the wallet's there to support it with the low gas fees. And yeah, so that's kind of where I see them going. And it's, I think they see an opportunity. So
From
really exciting
what
happens next.
Sorry to interrupt you, but from what I've been reading about GameStop for the last 2 years, I've been using Reddit, like mostly regularly for 2 years. Going on the main page and just reading about all the world news is a very nice thing to do, in my opinion. It's just like something I always end my day with. And I've been getting GameStop in my news like on a weekly basis now. So it's in our like psyche. Like everybody has seen it in the news now. Everybody has seen advertisings, and that is very important for the long-term success of a company, in my opinion. And now that they're pushing these DeFi products and they're going in this direction, I think that they have a opportunity to kind of monopolize connecting the blockchain to something that most people use on a day-to-day basis, most people interact with on a day-to-day basis. If people start compensated for playing a game, they get some, like if they win a tournament, they get some crypto first of all that like bypasses a lot of the regulatory restrictions with how much money you can give someone and how and why. It could also like get people into tech more because now they have this asset that's there and they have to figure out how to use it. And other people also want to win this asset because it's a prize. So people are going to have to figure out how to use it. I think they have a great opportunity to provide education and more compatible, more realistic products than what we typically have with DeFi and blockchain stuff. Do you agree with me, Brian?
100%. Yeah. I don't know if either of y'all played like RuneScape back in your early days, but I can just imagine all my RuneScape items being, in my wallet. Why not? Where you could trade it. I mean, even back then, people were selling RuneScape accounts, and of course, it was against the rules. But people, they would list on eBay like a joke, and they would say comes with free RuneScape account, and that's how they'd get around the rules to buy and sell RuneScape accounts. But now you can actually sell your account. Like say if you actually played a game, built up a player with all these levels, and had all these items, you can now value that. You can trade it. And I think GameStop sees that coming, and they're embracing it and making that happen. There's Ryan Cohen always says with Chewy, one of his big goals was to delight customers. And what that means in practice is Chewy, for example, if you have a subscription and you call and notify them that your pet passed away, they follow up with a card and flowers or something nice just to, basically say, hey, sorry for your loss. If they accidentally ship you an extra item, they basically say donate it to the local shelter. If you didn't receive an item, you just call them and they send you a new one. I mean, it's basically customer first approach. And Ryan Cohen's already implementing this with GameStop, and there's already stories online about these same things happening, plus more. People calling and saying, "Hey, I want to buy this game, but I live an hour away," and they're saying, "Hey, I'll put your name on it and hold it for you," kind of thing. Where, growing up, I don't know that I could say my local GameStop would have done that, but they're starting to change. They're starting to change that culture, and so I think it's gonna be really good for them moving forward. And I think GameStop will be more than just a brick and mortar. I mean, that's of course the bull thesis, and everyone that supports that always says, "Oh, it's a dying brick or mortar," which it's not. I mean, it's hard to make that argument because on paper, it's just really not anymore. They're just going in a really different direction, in a positive direction. So.
Yeah, can you talk a little bit about that? I have some questions about, there's a couple things we can talk about in terms of the whole narrative, but it's really interesting what you said. I definitely grew up as a gamer and played games, RPGs specifically, where you might have a character, we have all these items, and there's like a time and value and energy, almost like a real monetary value in a marketplace around those items. And tons of people will spend US dollar, real world fiat currency on this sword in a game. And I think a lot of people can relate to that. And I think there's some Web3 projects that have unlocked a version of that. Like Axie Infinity is a great example. I think it was the fastest growing game last year. Was a Pokemon style game where the creatures that you caught were unique instead of fungible like the original Pokemon versions. And therefore you could have a secondary marketplace for that. That's actually the first time I've ever heard that GameStop and like the whole GameStop narrative and what's really going on with them as a company. I didn't really actually think about the fact that they could be the first player to really move on that and maybe create a widespread platform and ecosystem for all these games. Is that part of the plan? I'd love to hear a little like short summary of like, yeah, what is the business vision of how they capitalize and maybe be a first mover on this? What's going on with that?
Yeah. So first, I want to correct myself. I think I said bull thesis. I meant the bear thesis in my previous comment. But so here's the thing: is Ryan Cohen actually at the shareholders meeting last year? He came out and said that he's not going to detail out the plan just because of the sensitivity around GameStop stock with the short sellers and a lot of different factors. Everyone calls it like 4D chess is being played right now. And so he was pretty upfront and he said, hey, judge us by our actions, but we're not going to lay out a plan. With that being said, of course, you can kind of look at some of the things they're working on and kind of see where the vision's going. And so they're heavily investing in NFTs and in blockchain. That's definitely a big push. But they're also heavily investing in distribution centers and in logistics. And they've actually invested a lot in inventory. And so, if inflation, I think the consumer price index came out just the other day, it was like, what, 8.7% or something. And that's like it's looking like we're going to average 8% inflation for the past year, right? And so, if they bought their inventory and now they they have inventory for a year that they don't get a hit on inflation on, that's definitely, they're going to come out stronger at the end of this year on their balance sheet because of that. And so I think there's a lot of things like that GameStop's really going in a positive direction. But
I want to mention some things that I've read about, like ask questions about something related to the wallet that GameStop recently came out with. Have you used it, Brian, by any chance?
I have, yeah.
Okay, so
Nothing significant, but I created an NFT and my friend sent me an NFT. That's about it.
so from what I've read, that it's self-custodial, you own it. It's not like basically having it's not like the Coinbase app where the wallet is owned by Coinbase and they just let you use it. So I read about that, and I read about somehow they avoid high gas fees by doing some layer 2 stuff called a loop ring. I'm not really that educated on this subject. Like I've never heard of that specific term being used. What is that?
Yeah, so the main GameStop wallet is just like any other Ethereum wallet. So if you use MetaMask, it's very similar. It's a plugin for Chrome, or if you use Brave, you can use it basically any Chromium-based browser, um, and it'll connect to websites like any other Web3 wallet. And so you have a password and you have your keys that you create, and um, the mnemonic phrase that you can basically back up your wallet with. And then the level 2, so of course on level 1 Ethereum, gas fees have been pretty high lately. And there's some plans in the future of Ethereum to fix that with shards and I guess other things. But some people don't believe it's going to be the final solution. And there's also this other opportunity in the short term to lower gas fees with some technology that's called like ZK rollups, where they basically take a bunch of transactions, and instead of processing through the blockchain immediately, they basically stack them up and process them all at once, which makes it a lot more efficient for the individual transaction fees. And they're able to do this in a way now that basically still has the same security as the original Ethereum consensus mechanism. And I'm going to correct myself there. Actually, there are small additional risks, but they're minimized now. It's gotten to a point where those risks are actually very small. And so you can, mint NFTs for a fraction of a cent, and you can send Ethereum for fractions of a cent to other people. The catch is it is going to be on that layer 2 network. And so to send it from the layer 2 to the layer 1 network does require a transaction. And that transaction would be on the layer 1 network. And so it'd be, I guess what I'm getting at is with the layer 1 network fees. But the idea is if you have, there's kind of multiple layer 2 networks that are kind of maturing right now. And what it looks like is a lot of these
Optimism is
layer
one of them.
2, yeah, and it looks like a lot of them are going to be interoperable. So you're going to be able to basically transact between layer 2, and you'll never have to actually get on Ethereum layer 1, but you'll still have the security and the those
For
aspects of
anybody,
Ethereum
I want to
baked
give a
in. Yeah.
quick shout out. Sorry to cut you off. I just want to give a quick shout out to this company that is doing exactly what you just mentioned. They're called Live Finance, LI Finance. They have this, it's basically a bridge, and you can take any currency from any layer 2 and switch it to any currency and any other like layer 2 or non-layer 2 instantly with a low transaction, like the transaction fee is equal to where you're taking the payment to. So if you're going into a layer 1, you pay that layer 1 transaction fee. If you're going into layer 2, you pay that layer 2 transaction fee, and you do it all from one place. Typically, a lot of people have to move from one place to another, to another, to another to get their money out, and it would be a lot of like you'd have to sit down and focus and really like pay attention to each wallet address and each network. If you guys haven't heard of it, check it out. I'll leave a link in the description. Live Finance. Sorry, Brian, go ahead.
I'm going to build on that too, because
Yeah.
I have a question that links right into what Sharif was mentioning in accordance to where you're headed with things, Brian. So like speaking right there of like the layer 2 interoperability, Sharif mentioned something, optimism. You hear a lot about Arbitrum and the layer 2 wars that are kind of going on. I don't know if they're wars, but there's definitely like this opportunity for layer 2s to rise to the situation as we wait for the merge. We'll see what happens. I know that really significant testnet merge success just happened, but who knows when it's going to occur. And so my question is about the interoperability. Does that mean, is it comparable between layer 2s if you're going to stay there and avoid going back to mainnet to pay the Ethereum gas fee? Are we now talking like a bridge type of situation, which then creates a vulnerability like we've seen between other blockchain bridges, or like, Sharif, with your development sort of background, and also Brian, you following the layer 2s. Is that what's going on with layer 2 interoperability, or is it more secure?
I don't think so. So when you start comparing like Ethereum to Polygon, Polygon's like a side chain, and so there is a bridge kind of between it. And so if Polygon fails, Ethereum's not really affected. Now all the smart contracts in between them are going to go crazy, but Ethereum's still going to keep running. Now, when you look at like a layer 2 solution, if Ethereum fails, the layer 2 is going to fail. There's no way around it. Now, if the layer 2 solution itself fails, Ethereum is still continuing. But the thing is, it's still backed up on Ethereum and it's still tied to your account. So you're still using your same Ethereum account just on that layer 2. And so, maybe, I don't know, Sharif, if you have a better answer here. Maybe I don't really have an answer to your question, but I don't think, I do understand it's not the same risk. Maybe I don't know how to fully explain it, but I do understand it's not the same risk.
I think a lot of the risk with the layer 2 stuff comes from the fact that you have to pay attention and you really have to go through multiple different apps or sites or services. You have to jump between all these different services. You have to be paying attention throughout the whole 30 minutes to an hour that it takes to do it right. And at any point, you could just go on the wrong link, or you could go on a phishing website and lose a couple $1,000 because you have to go through so many steps. So there's a lot more ways to fail. But with the new tech that's coming out, like Live Finance, the like one-stop shop where you could get that trade going in one transaction, get any token to any token. I think that's going to solve a lot of those security issues, but I think that creates this centralization around the one service that is doing this right now. When these side chains get built, they're built to be completely like interoperable with the Ethereum network. So a token that works on Ethereum would work on Arbitrum, on Optimism, on Polygon, any layer 2 built on Ethereum. And because people built it that way, there is a way to connect all of them. It's just going to take like some time for somebody to do it correctly because of how coding and Solidity is and how launching projects on the Ethereum network is. That's what I think.
Yeah, no, I want to piggyback off that and just say that, I mean, this is kind of out to anyone right now. If you're interested in coding or finance or any of that, I mean, the future of finance is being built right now, and it's on blockchain, and anyone can do it. If you have a computer, you can learn and you can be part of it. And there are a lot of opportunities out there. And so there's some
Hundreds
tools.
of thousands a year.
Oh, yeah. And it's just the beginning. I mean, we're still less than 20 years of maturity. I mean, we've had this technology less than 20 years, and so it's very early on, and there's so many opportunities. And there's some, I want to mention there's already some educational things popping up. The one that comes to mind is Crypto Zombies. It's a Solidity game that you basically run through and learn to program in Solidity while playing the game. And things like that people can get involved in, and you could actually earn money learning, which I don't think as a society we've quite captured that concept of the play to earn or earn as you learn kind of thing. But I could definitely see a future where you know you don't necessarily pay to go to school. It actually pays you in a way, or you don't pay to play games. You can actually earn money playing games. There's actually some value that's being created by you playing games. So I'm
I
really
think
excited for all that.
I really agree with that. Learn to earn is definitely something that, because I learned how to code by myself, like not by myself, obviously. I had like dozens of different mentors that put their lessons online for free for anybody to like watch, and they work on them for dozens and dozens and dozens of hours. And they will in one video teach you how to make $20,000, $30,000 just by following that one course or that one lesson or that one video, literally. And that's a very positive thing in our society that's going on right now. If you just go on YouTube and you search whatever it is you want to learn, you'll find 100 different videos teaching you how to do it for free. And that's just something that we've never had before. Then what it's really interesting, and it makes me super hopeful that some video games are also moving in that direction. Like people said, Crypto Zombies, I've been recommended this by many, many people. I haven't done it yet because I'm trying to learn a different language, but it just that concept really intrigues me and it makes me hopeful. But I also sometimes could have a bit of doubt about the real value of something like GameFi, or just, and uh, anytime I hear that you could make money for doing something that could actually not be productive, I get suspicious and I get skeptical, and I have this part of me that just wants to ask a bunch of questions. So that's what I'm about to do in a second. Brian, do you think you can answer a couple of my a couple of things that make me personally like skeptical of GameStop?
Sure, I'll sure do my best.
So I think one of the most important questions before anything else is like, where do you get your information from? Is there a source that is reliable, that is consistent, that people can take a look at so they can like prove this to themselves, or just research it before they before they actually invest in it, or before they just dive deep? Is that what sources do you use?
So the big thing the biggest thing is you will be your greatest source of information. There's no, this is pretty much all cards stacked against you. I mean, the same people that are short on GameStop are the same people that basically own mainstream media and control that narrative. They're also the same people that are contributing to politics, so they own that narrative. And so, like, you're not going to go out and find a Bloomberg article about anything I talked about here today. And so really you have to use critical thinking, and you have to make these decisions for yourself. With that being said, I've learned a lot from Reddit. It's pointed me in a lot of the right directions where I've then researched further myself, and I've become comfortable with these decisions. And so that has been really helpful. Of course, there's not helpful stuff on Reddit too. So again, back to the critical thinking, you have to know kind of what to follow and what to not. There's a Reddit sub called Superstonk. It's probably the largest one with GameStop, or the most popular one. And I'll actually put that in the chat right now. One of the other ones I probably prefer is just GME, which is just kind of one of the original GameStop subs. But those are really good to follow and kind of keep current on current events that are happening surrounding it. But really, to answer your question, it's one of those things you really have to kind of take ownership of yourself. I mean, there's not one person that's going to tell you, here's how it is. Unfortunately, you have to go out and really research it yourself. But once you understand it, it gives you a completely different perspective. And, it really answers a lot of questions or a lot of things that, I didn't previously understand about things that just never made sense to me. And so
Good,
I hope that.
I think it's a really good do your own research example, right? We always talk about that in crypto on this show and in our real communities. So when you're doing research about counter narratives and there might be bigger institutions against you, yeah, it's a good point of like the mainstream media is typically like burning down and it's on fire and it's hard to trust anyway. So I think there's an example there. Sharif, I don't know if you have an aspect to build off of within that. I do want to definitely get into the Robinhood part of the GameStop story and talk about the value of having a non-custodial wallet. We did talk about the GameStop wallet connection in reference to NFTs, but I'd love to get into that. Sharif, do you have anything to connect to for the do your own research? I know you're a big believer of that before we move into the wallet story with Robinhood.
I am definitely a big believer in do your own research because the media is a lying sack of shit. And I think we should all agree on that.
Well, I'll put it a little more tactfully, but yeah.
I'm just being honest, dude. Like sometimes I see like the media, I just don't understand how these people are consistently on TV after being wrong about so many things and lying about so many things. But it's fine. So the point I wanted to get to is how possible, if you could give a number, and I know that this is just like, it doesn't have to be based off anything logical, but how possible do you think it is? And do you think that you could be wrong about everything and whatever money that you have, whatever plus that you got on GameStop could just disappear because the peak is over?
That made me laugh pretty loud.
No, this important question. And I say this like with 100% seriousness. Either I'm convinced at this point, either what I expect to happen with GameStop is going to play out, or money, US dollars for that matter, are going to be worthless. And so in my mind, those are kind of the two options at this point is either it's going to play out and there's going to be positive price action, or something's going to happen that discredits the US dollar and the US market so much that basically money as we know it is not going to matter. And who knows, that could go, maybe that's positive and that rolls us into crypto for the next 100 years. I don't know, but I'm pretty sure it's going to happen because I don't think anyone wants, the collapse of the US dollar or the collapse of the US government, things like that. So I think they're going to find a way to unwind it. I think the question's more about how quickly or how long it's going to take.
Before you go into the Robinhood event that happened last year, because I think that's like the cornerstone of this whole thing. Before we get into that, yeah, I lost my train of thought for a second. Sorry, Jake.
I think there's something really interesting about what Brian is saying. Like, if you're a core believer, a true GameStopper, an ape, we have some other people in our community who are just as decisive in their thinking as you are, Brian. So I've heard it, and it's a really interesting story. I'm not sure what I believe. I just think it's really interesting. But there's definitely a narrative down the future, and a lot of people are thinking about it, where there's less and less attraction to typical New York Stock Exchange and holding those shares in an event where there's just less and less interest in regular US dollar, less and less of assets that are backed by regular US dollars. And there could be an event where this never necessarily plays out. But we'll see. What I'm talking about is that the fact that, like, many companies experience the situation where like their shares are being less and less valued on the stock market over time, just because we do have this shift into more and more Web3 assets. So we'll see. And maybe that will be really interesting to see what happens with GameStop. Maybe their actual share price on the New York Stock Exchange does something because they are earlier to move. It'll be really interesting to see what plays out. But it's cool to see that you believe so much. It's cool to have somebody that can come on the show to really talk about the backstory and all those details. Let's talk about the Robinhood thing. What was maybe you can go through that anecdote real quick about all these people being caught in that exchange and how they locked it and people were stuck. And I think it's an example
Right.
if there was a non-custodial wallet at play, maybe it would not have been so bad for some people.
Sure. No, and that's kind of one of the underlying factors here is that in traditional finance, your broker has the ability to restrict you from buying a stock. I mean, can you imagine going to a decentralized exchange and the exchange itself just stops you from placing the trade? It's not that there's not a seller or a buyer or whatever, the other end of the trade. It's that the exchange itself is saying, oh no, I don't, sorry, can't do. And I mean, they had a good reason. They're saying they didn't have the capital requirements. So basically they'd go bankrupt if they, didn't pause buying or selling. But the bigger question is, should someone in that chain have the ability to do that? And kind of the big thing that happened with Robinhood is, of course, the price of GameStop was going up, and the dust has mostly settled. There's still some kind of outstanding questions, but it looks like what happened is there's a lot of call options. So exactly kind of what happened in my situation, where people had bought call options expecting the price to rise. Their few $100 call options now went up to, a few, 20 grand-ish a piece. And the person on the other end of the call option basically had to go out and buy shares of GameStop to hedge on that being exercised. Because if that person decides to exercise it, they have to deliver, 100 shares at whatever that strike price was. And so, as the price is rising, there's this positive feedback loop where the more it goes up, the more shares they have to go buy to hedge against the rising price. And so the thinking is that the retail buys was actually driving up the price, and then there was this positive pressure behind it. And so what happened is, Robinhood, and it wasn't just Robinhood, this is actually something to clarify. It was actually the clearinghouse. It was Apex Clearinghouse that decided to turn off the buy button. Robinhood was just the big kind of public company that got criticized for it. But there were a lot of other brokers that also turned off the buy button, or that were forced to turn off the buy button from Apex Clearinghouse. And what happened is they basically turned off the buy button just long enough where those options contracts either were exercised or sold. So, people like me, again, my situation happened a month after this, but the same situation where you look in your account, that few $100 turned into 20 grand and you sell it, right? You say, okay, it's time to sell. This is like 1,000% gain or whatever, the stupid number is. And you sell it. Well, the thing is, when you sell, they no longer have to hold those shares to hedge against it. So they're able to sell those shares back to the market. And so basically by turning off the buy button, they were able to pause demand for long enough so that those call options were able to kind of clear out, and they were able to relieve some of that pressure. And that basically allowed the price to drop back into the double digits again. And there's some other factors too, with failure to delivers, future contracts, things like that, where basically, because all these outstanding shares that are in the market that aren't supposed to be there, they're having to pay to basically keep them there. It's pennies on the dollar, but they're having to pay to basically kick the can down the road. And so if you look at the GameStop chart, there's clear cycles where they're basically having to kind of renew these can kicks. But that's so I mean, going back to Robinhood, that's kind of how Robinhood got involved in this. And then of course, everybody learned about payment from order flow, where brokers are basically paying to receive, they're paying for the information to receive stock trades from retail, and then they're course, making money on that information, which is a big thing in the news now here a year later again. So
Yeah, and to
coming.
I appreciate all that anecdote. To clarify one thing, during the pausing of the buying, the one thing that it seemed was at play here is that situation favored several large institutions and a lot of retail investors who may have chosen to sell their shares at that high point. It seemed like there was a lot of individuals who lost and just couldn't exit their position, because then there was a huge um, the price dropped significantly after that event,
Well,
if I remember correctly. Is that the case? And I think one of the things is that true?
so you could always sell. They never restricted selling. It was only buying. And so the argument, or I guess there was actually a lawsuit that they found didn't have enough evidence to actually move forward. But the argument in the lawsuit was that retail investors missed out on the opportunity basically for a short squeeze, or that the price action would have continued upwards if they hadn't turned off the buy button. And so that anyone that was already in the stock missed out on that whole upside potential by them manipulating the market. I mean, that was the argument, is they purely manipulated the market to manipulate this stock.
It could have gone to the moon then, right? That's kind of theoretically that's
it would have.
Yeah, that's what it was. Okay, so that, I guess, is the narrative, is that all these retail GameStop holders, I guess you being in the mix, you guys could have actually liquidated all these short sellers. They could have died. That's, I guess, what I'm talking about, that, huh?
And that's the crazy thing, actually, is that if I wasn't actually even in the mix then, right? So if it would have happened then and it went to the moon, everyone then was expecting a stock price of $1,000. And so I'm not sure it would have gone to the moon. I mean, I'm not sure it would have gone over $10,000 if it actually did go off then. And the funny thing is, they may have had a way out if it went that route. But now that it's carried on for year and a half plus after that event, there's no way out. I mean, it's a trap, and they're so far deep in the trap. I mean, it's like I said, either it happens or money's useless.
I'd like to point out, like, as somebody who isn't invested in the stock and who never invested in the stock, when I saw everything go down with Robinhood, people were posting on Reddit. People were posting on Reddit about how they can't. I don't know if they can't buy or they can't sell. I don't remember that well, but sorry, Brian.
Yeah, no, not being able to buy. I mean, there were a lot of people at the time that the FOMO crowd hit pretty heavy, because there's a lot of people that had seen these videos and they'd seen the Reddit posts and they, had doubts. And then all of a sudden the stock price is going straight up and they're like, oh, well, I want to jump in, $300 a share, give me 100 of them. And they weren't allowed to buy 100. And that a bunch of people got mad at that.
Can we say that this is like kind of like the internet trying to go against the big guy?
I think what's happening is the big guy has been sitting in a very Gucci spot for them for a long time, and the only thing that's protected them is ignorance. And now that we have the internet, it's no longer a protection, because the internet spreads knowledge, and everyone can learn about these topics. And so it's getting to a point where the status quo can't continue, just because it's unfair and now everybody knows about it. And so the bigger questions are, what's going to happen? How do we move forward? What's next? And of course, I could sit here and be very optimistic and say, oh yeah, of course it's blockchain and this and that. But I mean, you still have these traditional finance structures in place. The federal banks, you have organizations like the World Economic Forum pushing their agendas. So there's uncertainties. It's going to be very interesting over the next 10 years, kind of how the financial landscape really develops there.
I'm excited to see where this goes. Recently, I think it was like a couple of days ago, they actually like put up some regulations, I believe, or they put up like a proposal. I'm not sure which it was, that they just finally addressed what crypto is considered at. They are saying that NFTs are going to be a new like kind of asset legally, and that DAOs have to register as a type of company. So it's super interesting to see where this is going. One of the most interesting things too is that the United States is looking into having their own currency. I think that my conclusion from this podcast episode, because I came in here very skeptical, I didn't understand it as well as I do now that I'm leaving and that I asked my questions. So I really appreciate you taking the time to answer these questions and put yourself out there, Brian. And thanks for being on with us, Jake. And, you know, like you brought a lot of clarity to this too. But my takeaway has been that GameStop holds a very unique position, and it's like in a perfect storm of different events that are kind of related, but not really. And it has all this potential. It's just really about whether or not they actualize that potential and they make the right moves while actualizing that potential. So that's what I learned. Anything that you guys want to end on by any chance?
If I could say anything, I would say just I would advocate for everyone to get involved and learn as much as you can. I think we're at a crucial time in society where, you know, like I said, critical thinking is, I think we need more of it. And I think everyone needs to deploy it. And once, you know, you get to the point where you can go out and make these decisions and feel confident with them, I don't know, I think we're going to go in a better direction as a society. And I'm really excited, like you said, for the kind of next 10 years and seeing how all this develops and, you know, hopefully being involved in it. So, yeah, I'm excited.
Yeah, Brian, I am too. Thanks for coming on and telling us more about GameStop. My two big takeaways before you close down, Sharif, is that when you find somebody who you can tell, like I remember first meeting you at the barbecue on Bitcoin Pizza Day, Brian, I was like, yep, you're around somebody for like 15 minutes and you can tell how much they know about a subject just the way they talk about it. And for someone for them, you know, to like respect their amount of knowledge and what they know, to then be so convicted about something, like I still don't know what I believe about GameStop, but when I meet you and I meet people like Kasim and then just like learn about their conviction and then over time understand maybe why they're so convicted, I really think that's a big takeaway and a lesson for everybody listening to this show is like listen to those people, you know, try to be as objective as possible and just absorb, use it as an opportunity to just like a layer two where, you know, simplify it. You don't need to know as much as them, but like understand the summary, roll it up. And that's one of the things that I've tried to do around you in GameStop. And then the second thing is always look for the connection and the lessons to Web3, right? The non-custodial wallets, the application for blockchain. There's a lot of nice lessons here, whether it goes to the moon or this whole thing crashes. Who knows how it's going to play out? I really think GameStop is going to survive. I believe in them. I see the application, and I'm just going to be optimistic because I believe in the whole story. So those are my big takeaways. What do you think about the whole thing for your conclusion, Sharif?
So I read this. Well, I didn't read the whole thing, obviously, but I read a lot of this 85 like page document that to prepare for this about GameStop and where it is and where it's going. And a quote that I liked was that if E3 is like the Vatican, why isn't GameStop like your local church? And from all the things that I've experienced this last year with meeting a community of people that are like-minded and getting to know people, getting to learn things, getting to participate in events, I think GameStop has this unique position to be that for the community and expand their business into more and more unique things, like maybe set up like areas where people can game with each other, maybe go into blockchain or metaverse or whatever it is. Just that innovation can take you far. I do want to end on one last question because this was so somebody from the DeFi Philly community asked me to ask this, so I'm gonna do it. Can you give us like just in a couple of words, 6 months, 1 year, and 3 years? What do you think that timeline is gonna look like, Brian?
For GameStop, is that
Yep,
you're talking
that's
about for
right.
GameStop?
GameStop.
Okay.
Mhm.
So a lot of people, it's a big thing online about no dates. And it's funny, I didn't fully understand it, but I do believe it now. I guess with that being said, I give some hints, at least from my understanding. So if you look at Ryan Cohen with Chewy, he spent, I forget, it was about a year and a half, 2 years from when Chewy, I guess, was kind of nothing until the point where it became kind of self-sufficient. And he has hinted that he wants to do a similar thing with GameStop. And so, from that perspective, that would put Ryan Cohen basically being finished with whatever he's doing at GameStop by kind of January of next year. That'd be kind of the 2-year mark. So I guess based on that thinking, they confirmed, I guess, in the shareholder meeting a week ago that the NFT marketplace will be launched this quarter. So that's end of June. 3 more weeks, sometime it'll be launched. There's speculation that Once Upon a Time and Shaolin, the Wu-Tang album, will be involved with that, or could be involved in the future. So again, maybe some heavy speculation, but if something like that happens, that could really kick off, the positive price action. And there's a bigger question too, because let's say it does kick off, and let's say we wake up Monday and GameStop is at 50 grand a stock. Well, how long does it take to get to 1 million? You see what I mean? Like, if it gets to 1 million, is it going to take 3 years to get to 1 million? I don't know. No one really knows. It kind of depends what forces the event to happen. And so I guess that's the big unknown right now. And so, yeah, the only thing I can hint at is it seems like Ryan Cohen wants to be done by next year. So I would say sooner than later, but so yeah, I don't know. Hopefully that's a satisfactory answer.
That is. Thank you for answering that. And yeah, I don't like putting people on the spot by any means, but it's just good to have your vision to understand, like, where do you think this is going to go? How is it going to play out? There's nothing wrong with trying to predict something, even if it's just a little bit. But I really appreciate you taking the time to do this. Thanks for being our first guest, and that's really awesome. I really appreciate it. It's a dream come true to have somebody on and have a great conversation.
Definitely. Yeah, no, this was fun. I really enjoyed it.
All right. So, and yeah, to end this, I want to give, no problem. To end this, I want to give a big shout out to DeFi Philly. Our conference is going to be on July 8th, which is maybe 3 weeks from when you guys are going to be hearing this. Try to make it out, even if it's difficult. I'm sure there's going to be a lot of value that'll come out from this. And just a big shout out to DeFi Philly. Honestly, none of this would be possible without them. So happy to see this event coming to fruition at the end. Is there anything you guys want to end on, Jake, Brian?
Yeah, head over to defiphilly.io for tickets. You can find the discount code. So the ticket is only $25. It's DeFi Friend. We are, the ticket sales increase every day. So make sure you go over and get those before it sells out. We do expect this thing to sell out. So thanks again for listening to DeFi Talks.
And I'll just end with get involved, whether it's a local meetup, whether it's on Reddit, whether it's listening to more podcasts, get involved.
Definitely, and learn. This is one of the best opportunities that anybody is ever going to have. We're at this point in life where you need to learn a good skill, and you need to learn it fast. You need to learn something that's going to continue to fund you for the rest of your life. And there's never been a point where that's more possible. So just get on YouTube, figure out what you want to do, try a couple things out, and go with it. And in a year or two, you will understand the power that just focusing and commitment and dedication, how far that can get you. All right, guys, this has been DeFi Talks, the podcast where we talk anything and everything DeFi and blockchain. We'll see you in another episode. Bye.